Turning to the markets, the local exchange will be contending with weaker global markets today after a rough September. The JSE had its worst month since October of 2020, and in September, a tough month for global equities amid a litany of risk factors. For a sense of how the markets are faring in early trade, we're joined now by Roy Mutooni, Analyst at ABSA Asset Management. Roy, a very good morning to you. Thanks for your time. Local stocks, including hospitality stocks, may benefit from South Africa's move to level 1 restrictions, as announced by President Cyril Ramaphosa last night. Give us a sense how the markets have opened in early trade.
Well, good morning. Well, markets have opened down. They're down about 70, 80 basis points. And it's interesting, Sogo Sun and City Lodge, which I suppose would be the hospitality stocks that would benefit, are actually up about 3%. But outside of these, there's very little else. Most of the top 40 is in the red. Most of the commodity shares, most of the banks and everything has sold off. And I think it's just in tandem with what's happening with global markets, taking on from what happened yesterday. And remember as well, some of the Asian markets are closed for today. So a very dreary start, very slow start to the final quarter of 2021.
Let's just hop onto some company news. Altron says it sold its People's Solutions business to a Dubai-based organization. Business process outsourcing is a profitable sector. Why would they sell off that part of the business?
So about a year ago, some time ago, they went through a strategic process where they looked at all of the operations and their strategy and their outlook, and they figured that this component of the business, while profitable, didn't fit into their bigger picture, and they wanted to focus on their core business. So what they've done is, rather than hanging on to it, is find appropriate buyers who would support the growth of the organization within the context of the industry, and let the businesses go. Actually, what was interesting was that they're actually splitting it into two separate businesses, and they're selling them to buyers who are quite significant in each of those industries, just showing that they're actually considering the future of the business, and they firmly believe that they can do much better without these businesses.
And Woolworths, on the other hand, says it plans to increase its workers' minimum wage to 40 Rand per hour over the next 2 years after receiving a lot of criticism for its high executive pay. Is this a move favorable or perhaps a strategic business objective?
Look, it's a great move. In their statement, they're talking about trying to look for a balance where it's not just paying the least, it's paying a living wage. Up until now, they've not been paying the minimum. They've been paying higher than minimum. So what this is going to be is it's going to be substantially higher than minimum. It's easy to be cynical and talk about the comparison with executive wages. But just remember, in South Africa, our biggest problem is we have an oversupply at the bottom and an undersupply at the top. There are arguments that can be made about excessive executive pay, and they're absolutely valid. But I think this is a move that's commendable for them to look out for their workers in this way, and to also draw the line between minimum wages and a living wage. You and I would know that there's a significant disconnect between the two.
Absolutely. The NUM, AMCU and Solidarity have declared a dispute after asking for a 1,000 Rand increase, which Mining Sibanye says is unaffordable and could bankrupt the business. Is it possible that increasing workers' wages will perhaps shorten the lifespan of the mine?
So I think it's important to take this into perspective. Both parties have started in exactly the way you'd expect them. The unions come with a significant bid. The employer comes with doom and gloom. But the truth is, first of all, gold prices haven't risen that much. It's not like platinum or any of the others. And secondly, remember, Sibanye's mines are deep-level, short-life mines. So basically, they were cobbled together with the hope of cash cowing them so that the organization would get cash to invest in other businesses. So they're already short-life mines, and wages are a significant cost item. So it would be reasonable to assume that what management is saying is true. If it reduces the average life of the mine from, say, 10 or 15 years to maybe 5 or 6 years, then that's a significant thing that needs to be considered when you're managing wages. But I think the biggest thing here is that inflation is high, gold prices haven't risen as much, and the comparison with the other commodities is actually quite unfair, considering the short life that's left in these mines.
Absolutely. Thank you so much for that very thorough analysis. Analyst at ABSA Asset Management, Roy Mutooni, giving us a sense of how the business world is faring.